Are you ready to navigate the ever-changing landscape of home buying in 2024? From buyer agency compensation fees to the ever-changing, unpredictable interest rate, we are here with Mark Duplantis of Allegiance Home Lending to talk all things of what to expect with home buying in 2024. Mark, thank you so much for being here with me today.
Thanks for having me.
Yeah, so August 2024 is like the landmark in the real estate industry. Things have changed in real estate, which also includes lending,
Yes, it does.
closing company, all of that. I almost feel like it is the equivalent of what COVID did to the medical field as well as just all industries in March of 2021.
Yep.
It was like the time we'll never forget.
We'd like to.
Yeah. And that's what real estate is going through here in August of 2024. So, in talking about that, the buyer agency compensation fee is the new kid on the block. And it's what it is that we're going to be expecting from here on out. And so, moving forward, for a buyer to put an offer in on a property, how are the lenders going to look at this?
So we're gonna, the GSEs, Fannie Mae, Freddie Mac, have not formally come out with guidelines per se. However, investors, lenders, and whatnot, in an act of prudency, they want to see that we verify those funds just like we verify any other funds for closing costs, down payment, and whatnot.
So, and I guess to back it up just a little bit, that buyer agency compensation fee is what we're talking about here. And so now a realtor and a buyer must have a agreement in place as far as how is that realtor going to get compensated for the representation of the buyer before we even go see any houses. There goes my pen. So before we see any houses, that agreement has to be signed, because not only is that the outcome of the NAR lawsuit, but it is now state law in Louisiana as of August 19th, 2024. And so that agreement now doesn't mean that the funds have to come from the buyer.
Correct.
Because it can be negotiated from the seller, and on the purchase contract is where that'll be. So once we have that part figured out, right? Agent and buyer sign buyer agency compensation agreement. Buyer starts looking at houses, falls in love. We write a contract, it gets executed, and now we're sending it over to the lender. What else should we be sending?
Well, we definitely want the purchase agreement and all addendums, which has always been the standard. Now we're going to want to see that buyer's agent compensation agreement. The reason we want to see that is, in addition to the funds that are required for closing costs and down payment, we need to know that if the seller is not covering that fee, that the buyer has the funds to be able to cover that as well. So we're going to be looking at the assets. We're going to be looking at checking account, savings account, 401k, wherever those funds may be coming from. We want to see that. We want to see that early on in the game, and so that way we don't have any surprises down at the end.
Because having that smooth process for that buyer client is really what means the most. And so
Correct.
Having that information up front can really help
Absolutely.
that transition.
Absolutely, because there might be some hurdles that we need to jump through, and we want to get that early on. No one likes surprises. You definitely don't want a surprise when you're buying a house. No one likes surprises as if you're buying a car. I don't like a surprise when buying a pair of shoes and the price is different when I get to the end. So it's one of those things that, hey, it's a bit of a process. Takes usually a few weeks to get done. So the earlier we can see this, and try to stave off any potential issues that we may have. But again, it's all about information. So the more information we can get, from our clients, sending us their asset information, and from realtors to send us all the pertinent information surrounding this, the better we can be prepared, and the client can be prepared.
Nice. So then also there's different loan types out there. I want to talk specifically about VA loans. So VA loans are typically for military. Those who've served in the military are eligible to get those VA loans. And with that, the way that those, I guess, guidelines, if I'm using the correct verbiage, are written out, they typically are really mindful of what that borrower pays for.
Correct.
So for instance, like the WDAR, that termite certificate, they do not want to see that borrower pay for it. It needs to come from someone else, anyone else.
Right.
And so there's been concern as to how are they going to look at the borrower for a VA product, and I guess, like along with that buyer agency agreement, are they going to be able to make that payment and offer that compensation to that buyer agent? Are they going to be penalized for any of that?
Won't be penalized. The VA actually did come out with a ruling for this and said that the compensation can be paid by the veteran toward for the buyer's agent compensation. They were one of the few agencies that did come out and change that, because typically the veteran could not pay it in times past. So they did make that change. So that is able to get taken care of, just like any other loan.
Yeah. So, and that's really good. Granted, your real estate agent should be trying to negotiate that fee and get that paid for from whatever other source other than you. However, just know that you could be the one having to pay whatever the difference is should a seller not want to pay what that compensation agreement is.
Correct.
So, why is it crucial to include? Well, actually, you know what? We already talked about that. I was going to say, why is it crucial to include the buyer agency agreement whenever purchasing? But we talked about that. And
Correct.
it's just to stave off any kind of surprises later on down the loan. And so, interest rates?
Interest rates.
They have been all over the place recently.
They have.
Yeah.
They have. They have recently, with some of the reports that came out around August 8th, I believe there was a significant dip in the interest rates. So yeah, it's been a volatile market. But it's been a nice little bit of a reprieve in the fact that it's come down, say where it was a year ago. So that's been good.
So, what do home buyers really need to know right now and whenever they're shopping and interest rates? And because there was talk, right, at the end of last year of
Mm-hmm.
what the projections were going to be for this year. We're expecting some cuts and things like that, and that never happened.
Never happened. Anyone that tells you that they know what the interest rates are going to do does not know what the interest rates are going to do. I can tell you, you have a 50-50 shot of being right. And certain things, having a 50% chance of being, right is great. If I had a 50% chance of making it in the NFL, hey, I take that. If I had a 50% chance of winning the lottery, I'm going to take that.
Yeah.
50% chance of right or wrong on my house, those are odds that I don't particularly like. And so, the things with interest rate is you have to work it's the payment. You don't pay an interest rate. An interest rate goes into what your payment's going to be, but an interest rate is not your payment. You don't write a check to your interest rate. You write your payment every month. And so there's the interest rate factors into that, but you also factor in homeowners insurance, PMI, flood insurance, the price of the home. All these factors come into play. And so really when you're looking at when's a good time to buy, when's a good time to refi, when's a good time to do all this, well, you have to look at what works for you. So while interest rates may be across the nation relatively close and the same, that payment is specific to the individual writing that check every month. So what works for you may not work for the next guy, but it doesn't mean that it's not good for you. So you have to look at what works in your situation. So does the payment fit into your budget? You can look back, the generation obviously prior to me, there's always a talk of when they bought their first home, the interest rate was 16% or it was 18%.
Yeah.
And they focus on what the interest rate is, but really the focus should be on when they bought. They were able to buy because the payment fit into their budget at the time. And so, we've done loans, and you've been doing this a long time, just like me. When rates were at 8%, rates were at 7%, rates were at 6%, people bought because they had to look at, does the payment fit into their budget? So is there such a thing as, is it a good time to buy or not buy because the interest rates are high or low? That's kind of it's only one part of the equation. It's not a vacuum. Or is the price of housing up versus is it down? Because that goes hand in hand with what interest rates are going to do. So you have to look at the end of the day, what's the payment? Does it work? We could have bottom of the barrel interest rates, but have homeowners insurance skyrocket. That's the payment. That's what you have to look at. So again, if you're interested in buying a house, you get a quote from your lender, get an estimate, see what that payment is. Does it work for you? And then start from there. But don't let just the interest rate being up or down be the determining factor as if you're ready to buy or not.
Yeah. Well, and because we have so many things changing, right? And so even what insurance has done in our specific area, it has shocked some people. And so they may have just gotten into a house and it fit into their budget. Now all of a sudden insurance comes in and it's doubled and now there's something different. There's a different story. And so I'm getting a lot of calls from people who are in positions that maybe their insurance is a lot greater than what they anticipated it being, and wanting to put those properties for sale, or just there's all kinds of things that go into that. And so I do love that it is really what fits into your budget, and what does that look like for you as a homeowner. And it's not about all interest rates. So funny enough, two things. One, whenever I first got started in this business back in 2005, interest rates were kind of where they are right now. Mm-hmm. We were at 6.25, 6.5. Mm-hmm. And so here we are. Real estate's always said to go full circle. And so here we are. Right. And then with that, the other thing is that, interestingly enough, the first time that I ever came to you guys, I hadn't bought a house yet, even though I was practicing real estate, and I got quotes because I was like, where can I go? What's my purchase power? And so got those quotes, and it was for different loan products. Might have ran a conventional, an FHA, and I don't even know if RD was around then, or if that might have been the third one that was ran. Anyway, what was interesting to me is that there was one product that it was a lower interest rate. It was a lower interest rate, but higher monthly payment. And there was another one that it was a higher interest rate with a lower monthly payment. And that was the first time I ever realized that exactly what you're saying, that the interest rate is just one piece of it.
Correct.
That loan product, how it's structured, the specific property, and how that insurance looks, as well as the taxes, all play into
correct
what that monthly payment is going to be.
It happens all the time. It happens all the time. And then you also have to look at what's important to you. Sometimes more money out of pocket, but a lower monthly payment, or vice versa, less money out of pocket, but you can afford a higher payment. So we're going to look at all those different programs. Again, it's tailored to the individual. All these programs are out there available for everyone, but what works for you?
Okay, now I'm going to ask you one other thing, and this is something that I advise my clients on, but I want to see how you answer this, is because we've had some interest rates that were higher just last year than what they are right now. Mm-hmm. Yes. And so if somebody purchased last year and interest rates are what they are, when's a good time for somebody to refinance?
Well, again, that's specific to the individual. So, let's say you got a house and your interest rate was at 8% last year, and the rates dropped, and you can get 5.75%, 6%, whatnot, and your savings are about $250. Okay, to some people, $250 is a lot. To some people, it's not. But to say, I want to wait and see if they're going to go down a little bit more, maybe you save another 30, 40 bucks. Okay, are you going to pass up the $250 to save another 40? Again, this is not Vegas. It's the house is going to win. In that regard, I guess it's like Vegas, but I wouldn't gamble it. So, do you want to leave your potential savings on the table for hopes of getting just a little bit more? It's different for everyone. I'll tell you a really quick story. I did a loan for somebody that's very successful now, probably about 20 years ago. And at the time, the gentleman had 3 young children, and he came to me and I said, we're going to do this loan for you. It was around Christmas time. And I said, you're going to skip a payment. And when you start paying again, your savings is only going to be about $100, $120 a month. That guy took that deal because it was great for him at that time. 3 young children, Christmas time, skipping a monthly payment. It worked really great for him. That same gentleman today would not do that loan and save $120 because he's moved on in his financial state. But at that time, it was perfect for him. It was a good move for him. He'd only been in this house for about a year or so. So the thing is, it's specific to everyone. Mm-hmm. You got to look at what works for you. And then of course you're looking at refinancing. What are you doing with that money? Are you just doing it for the sake of lowering your rate? Are you trying to pay off some higher interest credit cards for that matter? And when you factor that into what your current rate is, what's your blended rate? Is your blended rate 16% because you're paying 25% on these credit cards? There's a lot that goes into this. So again, there's no blanket statement about don't refinance now or refinance now. It's let's look at your situation. And for some people, it doesn't make sense. For others, it does. And your needs may be different than my needs, which may be different than the next guy down the road. $100 might be a bigger deal to someone than someone that may have, more means, and it's really not worth it to them. So it just all depends. Yeah. But I would say reach out and get a quote and see if it works for you.
So key takeaways that I'm taking away with me from today's conversation with Mark is really make sure that you reach out to the professionals. It is not just a one size fits all. It really is specific to you, the individual, and what your circumstances are and what your goals are. And so if you have any questions about interest rates or what's happening in the market, your purchase power, or anything around lending, please reach out to Allegiance. Mark and his team would be happy to help you in regards to that. If you have any questions regarding buyer agency agreements and buyer agency compensation and the changes that have happened there, feel free to reach out. I am here to help serve and support you at the highest level. Thank you so much for watching. And Mark, thank you for being here with us
Thanks, Kelly.
today.
Appreciate it.
Yeah.